Good morning, everyone, and welcome to the Quantum Leap Morning Leap. This is our trade plan set up for Friday, January the 22nd, 2016. My name is Doug McKay. I am the head moderator and founder of Quantum Leap Futures. This is a subscription room, so we do live trading during the day, plus these pre-market sessions. If you're looking to come in for a free trial, I'll put my contact information up in just 1 second. Please read through the disclaimer. Nobody at Quantum Leap Futures is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence in your own trade plan with your own trade metrics. Okay, so if you want to come in for a trial, just give me an email at quantumleapfutures@gmail.com. Sorry, there is no website. I'm not a commercial venture. I'm not really trying to sell anything. We come in here and we're traders. Or give me a call, 647-545-8065, or simply send me a Skype contact at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. My YouTube channel is Quantum Leap Futures. There's over 300 days of pre-market plans. And if you like what I do, please follow me at Crazy2 on Twitter. All right, so yesterday we were looking for a rotational day, and we were looking at the possibility of getting continuation if we broke above 91, or we got down below the 34 level, 32 level, that key line in the sand. Our warning line was the CLVN at 48. We basically opened up, came down, tested the 1840 level, and then we rallied all morning all the way up into the 1883 area. Remember, we were looking at that 82 area. That was the prior microcomposite VPOC. And then sellers stepped in, rotated us all the way back down into the open, and they found buyers down there at the open again, bounced off of the developing value area low, and then came back up and found balance and closed in around that 1865 level. News today, I mean, the earnings again, most of the earnings this morning, there was only, let me refresh this because there's a couple more that came out. So really there was only three that missed. The rest of them, were pretty much, there was only two. The rest of them were pretty good. They hit or they beat, which is good, and that continues to be the story throughout earnings from what I've seen so far. News this morning, we had core CPI, core retail sales. Core CPI was a slight miss, but it really wasn't that big a deal. What was really good is the fact that core retail sales month over month jumped dramatically to 1.1, expected 0.4, and previous was 0.0. The CPI again didn't, was a slight miss, and everything looks a little bit rosy right now. We've got flash manufacturing PMI coming in out at 9:45 Eastern, and then existing home sales and CV leading index coming up at 10. So first 15-minute and 30-minute time frames, we've got news coming out. So keep an eye on that when we get into the RTH session. I don't want to close that. Oh, I did. Let's take a look at the macro to the micro, just get an idea where we are. You can see that we've broken this trend. I use a 9 EMA and a 20 SMA and start on monthly, then work my way down. So we do have some weakness and a violation of the upward trend that we've been in for the longest time. We do see some serious weakness here, but we do have a technical gap that still needs to be closed on the weekly. And we're finding some support. We found a nice buying tail so far from that flush down to 1804 and a quarter, and they've brought it up some 82 points right now. Going to the daily, you can see we did come up, and let me get rid of this. We did close this technical gap. We came up and tested the 92 area. 91 is going to be critical for us today in terms of a key line in the sand. See if we reject this or break above and get a bigger run on the daily. But the trend itself is to the downside on the daily. On the 4 hour, the intraday, we've got a start of an upward trend. There is a naked cross right here, though, down at 1865 and a quarter. But the trend is starting up. We got a possible FUBAR, Mr. Sneaky tech gap. It would be closed somewhere down around the 71 to 72 level. Going to the 1 hour, same thing. You can see start of this trend. We've got good slope and separation to the upside. Price is actually paralleling the 9 pretty nicely on the 1 hour. Going to the 30-minute, same thing. We are losing a little bit of separation, a little bit of slope, and they are coming down and challenging the 9 right now. But overall, we've still got an upward trend going. We have a naked cross here at 63.75. Going to the 15-minute, same thing. You can see the trend is starting to weaken, but we've been in this nice upward trend most of the night. Again, another naked cross in at 1864. So this 1864 area to 65 is looking to be a good retracement point in terms of the naked crosses. And then you can see we've got consolidation now here on the 5-minute, and we've now broken below the 9 and the 20. There's another naked cross here at 1888 and a quarter. But we've got a possible start of a downward trend here. And there's still this naked cross all the way down here at 1860.75. Again, looks like at some point in time we're going to, this one got closed out right here. Looks like we could see another trip down into the 60s, and we'll look at levels that will give us a clue on how to trade towards them. Looking at the big structure, we came down here, we found those buyers down at the 11 and a quarter. They've sort of pushed it through, but nice buying tail. Yesterday, we kind of got stuck in the wicks. We've tested below and tested above, but we spent most of the day in this area, defining the auction. The actual VPOC from yesterday was at 65. So, right at the 2-day, we had the 2-day microcomposite VPOC shift up. It was down here at the 35.75, but now they accepted this value at this 65, and this is, we've got those naked crosses there, we've got the naked VPOC there, we've got the close at 61 and a quarter. So this would be an important destination, and the key line in the sand for that destination is going to be the break below 70. Below 70, I think you got a really nice trade into those targets in around 65 down to 61, 62 area. If we can't hold 78, then I'd start thinking about the possibility of coming down. I would look for a move down here to the 72, 75. I'm going to put another little profile here. I want to see what the 4-day is. The 4-day doesn't change. It's down here. Let me just confirm that. Yeah. the 4-day profile is the same, microcomposite VPOC is the same as the last 2 days. So the most traded price in the last 4 days, they've accepted this value at 65. So if we can't get continuation, they're back up around this 86.50 area again. If they can't hold it and break above 91, we're likely to come back towards the 78, the 72 area. But if we break below the 70, I think you got a really nice trade down into price acceptance here and the 4-day and 2-day microcomposite VPOC. And then if they don't bounce there or at the 60 level, then we could probably take another trip down towards that 48. The 4-day microcomposite value area low is down at the 1850, just above the 48.75, and this is going to be the key support level below us, because below there I think we make a trip all the way back down, and I don't think the 1800 will hold. I think we'll come down and break that week low at 04.25 and test into the 1700s. But so far we look strong. Overnight inventory is net long, so we'll look at some, where the longs start to get punished. A break above 91, look for them to take out the 92 overnight high and continue up into testing this 1900. And then if we get into the 1900s, I'd be expecting a rule of 10 to kick in and a move up to test the CLVN at 975 and possibly even push through into the 16, 15, the 15 and 16 level. All right, so let's take a look at the overnight, start moving our levels over. So our overnight high so far, we still have a half hour to go and we're near it, so it might be adjusted, is up here at 92. Key line in the sand above us is the 91. Look for them to take that out. The microcomposite VPOC is at 87, basically where we're trading, so I'm going to take that. I don't think that's going to change. You can see we spent a lot of time here at the, once we got up here, we spent a lot of time overnight. Basically, almost all of Europe has accepted this level here in around the 86 level. They haven't been able to take it and move it away from there. Our overnight low is all the way down at 55.75, which is basically one tick above our value area low from yesterday. And we got, we peaked below and we peaked above, but they accepted this value around that 65, and where they shifted the microcomposite VPOC up to. There is a an LVN. There's this zone between the upper and lower distribution that starts right here at the 80 level. So what I would do, and then you've got the 84.75, but what I'm going to do, so I'm going to use the 83.25 and use the 80 level as a target, and then reevaluate it. Just below that, you've got the VWAP at 24-hour VWAP at 79.25, and our weekly ATR upside target. So this week, we've already got. Let me just forgot to write this down. So far this week, we've broken the ATR upside and downside target. So we have 103.25 point range so far for the week. So we're above our weekly ATRs. So there's really, they're not of importance anymore because we've already had expansion. So I'm going to use this 79.25 area as a trade area, and then below that I'd be looking for that move down into 74 would be my first target, and then I'd be looking at this this 72 as a trade area. And we've got that. I don't really need any of this now, so let me get this off here and expand this out. We have that 70 area, which is going to be our, our first warning line. I'm going to use it as a key line. You could probably front run it at 72, and I'll probably take the 72. But if we break the 70, which is just below it, I'll accelerate my trade into that 65, into the 61 and a quarter, and look for a trip through value all the way down to the overnight low and the value area low down here at the 50, 55 level. And then below that, our key line in the sand for a bigger move down is going to be the 48.75. This is our key support line. And I'm going to make 70 our key line in the sand below. And then 91 is already our key line in the sand above. Below the 48.75, our floor pivot, I should move, that's up at 60. 60 and a quarter. I'm going to take this right off and just use the floor pivot as a target. All right, and then below the 48, you've got the 40 level, 40.75, and then below that, the big target below is going to be this naked VPOC. The daily ATR is expanding still at 1892. The daily 20-day ATR is 42.86, and that takes us down to 1849, just above our key line in the sand. So that's a critical point for us to hold. Otherwise, a move down into the 35 and the 2015 year low, and then all our targets and trade levels remain the same. That we've been looking at below us. In terms of the upward side, if we get above 91, then I'd be looking for a move up into the 96.75. Off of the low of the night at 1855.75 plus the 42.86 ATR gives us a daily ATR target up at 98. And I don't think that if we break the 98.75, I'd be targeting the 0350. But my main target is going to be this 1909.75, the rule of 10, and then above that up into the 14 and 15 area, and then all our targets above all remain the same. We're back in the 1900s, and if we can hold the 1900s, I'd be looking for us to slowly come up. We've got a lot of auctioning to do up here in the 1950 to 1970 area. So if they can come up and accept this 15 again, I'd be looking for them to slowly grind their way up. But we might just peak into the 1900s and then fail in around that 15 area. So we do have to be careful about that. We're going to open up at above range and above value if we hold above this 84 before the open. We still got lots of time, but if we do, look for initiative buyers to step in here and take us up and take out that overnight high. If we get two-sided trading, I'd be looking for them to come down and test into this upper distribution, probably even come down into the 72 level. But we've got all the levels there. Currently, right now, the Keltner center line is sitting at 88.50. Above it, move to the upper Keltner takes us up to 94 and takes out that overnight high. If we can't get above it, a move down to the lower Keltner is going to take us into the 82 and into this distribution zone, the upper distribution zone from yesterday. And then the VWAP overnight is all the way down at 79, which is our main target, just inside a range. So that's what I'm looking at in the ES. Let's take a look at gold. Gold again, just chopping around, around this 1100 mark. They fell down below 1100. We said if that happened, we'd come down to the 1095 level, and we're trading there right now. As long as the indices are rallying, gold's going to have trouble holding. So, if we can't get a bounce here at 95, I'd be looking for a move down today towards this 86, 87 level. But if we get back above the 1100, a move to 1102 is going to be pretty strong trade to get in and get funded with hopefully continuation up into the 1104, 1106 area. Anyway, that's what I'm looking at, gang. That's going to complete our pre-market trade plan setup. As always, trade well, trade safe, and we'll catch you on the flip side.